Welcome back. This is Open Exchange, live from the CNBC TV 18 Motilal Oswal studios. Well, we are going towards market, the pre-open, which is about, a minute away. SGX has not been giving a very clear picture of what it wants to do. It's largely flat, although it's swung from being in the red to being in the green now. 18,081. Prakash Diwan is still with us. Prakash, IT services, right? I mean, we'll all start talking about IT services because results start next week. Is there, and that's a big beaten down sector, purely from a short-term trading perspective, is there money to be made here going into some of these results? I think TCS reports next Tuesday.
Yeah, Prashant. So Monday is, I think, Monday evening is probably when you'll start seeing that happen. And, interestingly, everybody thought, the December numbers were kind of encouraging enough and you might not have that brutal sell-off or meltdown of sorts in the tech stocks. But the commentary from the US hasn't really changed in its texture. And even the new contract wins that you would probably anticipate to keep levels up are still missing. And remember, stocks are still at about 25-30% PE multiple premiums than what they used to be pre-COVID. So it's not that we are looking at them available cheap. So I would definitely expect that some sort of softness would happen unless there's a joker in the pack in terms of growth, which we haven't factored in and all. So I would believe it's best to kind of wait the numbers out for the entire earnings season to be out. The only stock that I would look at probably which comes back with some sort of a resilience is Tech Mahindra. So that for reasons because they have verticals which are far more resilient, have been far more resilient, and it's not dependent on a lot of those other businesses. But the likes of LTTS and all would probably have significant sell-offs which you could probably anticipate in this quarter. So stay away is best. And then probably you could also look at the second rung or the mid-size IT names at some point in time if things look okay in terms of margin retention for them. But then, it's still very, very gray in terms of an area which we will have to wait for the earnings season to come out. So I'm not betting on a pre-earning kind of a entry into any of the tech names at this point in time.
Okay, got that. Prakash, again, request your indulgence. We have to look at the FNO trades. Chandan Taparia, the derivatives and technical analyst at Motilal Oswal, joins us. Good morning, Chandan. How would you trade the indexes today?
Good morning, Atha. Thanks for having me. So, market got stuck in a range. It is finding support near 20-day exponential moving average, but at the same time, finding hurdle near to its 50-day exponential moving average that comes near to 18,250. Even if I look at the option data, call writing, put writing, both started to see at 18,000 strike. So we got stuck in a range where bounce are not getting follow, but supports are intact. However, in last two trading session, we have some decline, but multiple supports are visible. So as of now, I believe that 17,777, which is the recent bottom, is likely to act as a firm bottom. But at the same time, multiple barriers are likely to be at 18,123 and 18,250. So we have to play this range of 200 points plus minus from current level. And that is the only solution for next couple of days in the market. Now, looking at the Bank Nifty index, some nervousness is there, but multiple supports are also there at 42,200 marks. So data setup are getting mixed cues where some support-based bounce is also visible, but upside is going to be restricted in the market. So in this scenario, one need to be with selective stock-specific activities. So here the trades are first is buy on SDFC Live. One of the strongest setup in the entire market, which has given a consolidation breakout above 600 zone after the 47 long week. Due to the budget and other activities, insurance companies are in budge. We have seen good open interest activity with rollover of 95% from previous series to current series. So expecting the pattern breakout of cup and handle, which has the bullish implication. So recommending to buy with a stop loss of 598 and looking for an up move towards 640 level. Second trading idea, that is buy on Apollo Tyre. We have seen put writing activity in the counter, good rollover of around 86-88% from previous to current series. And because of the falling crude, most of the tire stocks are adding the momentum and the rolling higher. So recommending to buy on Apollo Tyre with a stop loss of 330. And here we are target towards 360 level. One trade setup that is on the sell side is the trend rounding top formation and at the verge of the breakdown. And because of that, we can see the correction of 3 to 5%. So recommending to sell on the trend with a stop loss of 13.15 and looking for a downside move towards 1230 levels.
Okay, all right. Thanks a lot for that, Chandan. Well, it's time to see which is its stock on a momentumizer segment. And Surabhi is joining in to tell us about its stock that she's tracking very closely. Hey, Surabhi.
Hi, thanks for that. So today the stock is going to be in focus. Today is Engineers India Limited. Now it's currently trading at 85 rupees. Yesterday alone the stock was up close to 8%, and in the last 6 months the stock has rallied close to 43%. Now when we look at the volumes yesterday, the delivery quantity was 7 times the average, close to 47 lakh shares, and the traded quantity was 12.3 times the average at close to 22 lakh shares. Now a little about the company. It's a global engineering consultancy and EPC player providing services to hydrocarbons and the petrochemical sector. It is a preferred partner for most oil and gas PSUs. As on September 2022, it has an order book of 8,400 crores, which is close to 3 times their trailing 12-month revenue, which gives it a robust revenue visibility. And recently, the company has signed an MOU with Numaligarh Refinery to develop ammonia production technology, and also received a letter of award for providing services in Mundra Solar Technologies, a group company for Adani Enterprises. All of these factors are going to work in the favor of this company going forward.
Surabhi, thanks very much for that. So keep an eye on that name. Well, the pre-open session is on your screen, and we are 5 minutes into it. Prices should settle down in a couple of minutes more, and then we head to market opening at 9:15. Crude prices have been pretty volatile. Last night they went up a little bit, but they slipped $10. I mean 10% to this week itself. What does this mean for the oil and gas space here? Dayanand Mittal is oil and gas, he looks at the oil and gas space. He looks at the telecom space at JM Financial Institutional Securities. Dayanand, great to have you with us here. Good morning, Prashant this side. So let's just start with ONGC, right? ONGC, I think the stock is still pricing some $40, $50 in terms of Brent crude prices, whereas prices are closer to 80. With maybe upside risk, notwithstanding what we are seeing right now, which is, sharp slowdown in China, the reopening not kind of sort of coming through in terms of impact on asset prices, commodity prices basically, but at some point it will. Your sense on ONGC from here?
Yeah, so we have a buy rating on ONGC with a target price of 205, and our primary thesis is, one, it's a good dividend play story. About 8 to 10% dividend is what we expect this year on EPS of anywhere between 30 to 36 rupees, depending on their final net realization. So that's one. And second, as you rightly mentioned, the stock is discounting probably net crude realization of around $50, while various changes to the windfall tax regime suggest government is fine ONGC making a net crude realization of $75. So there's enough headroom. $1 higher net crude realization implies about 2% impact on their earnings. So I think there's a decent 25 to 30% upside in this name. The key concern in this stock is, given OMCs are still burdened with huge auto fuel under recoveries, probably in the range of 70 to 80,000 crore for FY23 so far. There's probably a 10% probability event that government might ask ONGC at the end of the year to bear some more subsidy burden. Though we don't build that in an estimate, but that's what market is worried about. So yeah, but still, I think given where valuations are, I think that it's a reasonably decent risk-reward play.
The same logic would apply to Oil India as well? You would have a buy on that, Dayanand?
Yeah, we have a buy on that as well with a target price of around 250. Similar rationale, but we prefer ONGC. It's more diversified, more liquid name. And
you're not touching any of the oil marketing companies?
So OMCs, we would be more cautious, primarily because of a view that we don't think crude is going to settle at below $75 for long. I think there is upside risk to crude, primarily because of two factors. One, the supply side concern still continues. Russia has said that probably they'll not supply oil to countries who comply with the G7 pushed oil price cap from Feb onwards. So good for India that India and China are not complying with oil price cap. So no issues with the Russian supply to India and China. But to other countries, if there's a cut, then that could add to the supply side concerns. Further, EU's ban on Russian oil products also comes into effect from 5th of Feb. So I think there's enough supply side concern that can support crude price. But more importantly, the second factor why we think crude can stay supported at a higher level for long is the OPEC's resolve to support crude price in the absence of US shale not responding to high oil price. US crude production is in the range of 13 million barrels per day, right now around 12 million barrels per day, which is still below the 13 million barrels per day that they used to produce pre-COVID. So despite high crude price, E&P companies are not investing in US shale, having learned from their past mistakes, because it's a long lead cycle investment. So by the time they come to generate profitability, probably oil price might have collapsed. So that is giving OPEC a very strong pricing power, and they have communicated in very clear terms that they'll come and support crude in the event of any macro weakness related uncertainty which comes into. So given that backdrop that we don't think crude can stay below 75 for long, I think OMCs, though valuations are reasonable, but we'll still stay away from OMCs for the moment.
All right, Dayanand, requesting you to just hang on for a minute. It's 9:10, so we'll just get Mitesh's call. Mitesh, what's your call at 9:10 today?
I'll go with a buy on Ashok Leyland. Keep a stop below 145 half year and look for a first target of around 155 to about 156.
Okay, just for your information, Bajaj Finance is at least starting in the green, so some bit of short covering perhaps is in order. And the indexes itself flat to mildly in the green. The global cues are still looking green from Asia. Dayanand, you know, okay, no for oil marketing companies. I was more interested in city gas. The city gas companies, we've seen, along with crude, a fairly sharp fall in natural gas prices as well. Sooner or later, you think these guys are going to benefit, the city gas guys?
Yes, I think city gas companies are more structural stories, given the penetration of CGD companies in India are quite low at sub 10%. They have a reasonably decent pricing power, though it has got eroded over last year or so because of high global gas prices. But you all know this high global gas prices are not sustainable because these are 1.5 times equivalent oil prices, and hence there would be demand destruction. So recently we saw of late global gas prices have kind of corrected sharply, but still at a relatively high level, and probably may stay at a relatively high level for another 3 to 6 months, given supply side concerns still continue. But yeah, over a 1 to 2 year view, we think global gas prices will moderate sharply, and which would give back the pricing power that CGD companies used to enjoy. And also it's a clean fuel, and we all, particularly in India, we are focusing on reducing our carbon emissions. So this is one of the ways by which government will achieve that. So I think the policy support for CGD companies will continue to be favorable, though not as favorable as it used to be 5 years back, but I think it will be relatively benign regime for them. So we continue to like CGD companies. IGL and Gujarat Gas are preferred among the three CGD companies that we cover.
All right, Dayanand, thanks very much. Good speaking with you. Thank you very much for your time here on CNBC TV 18. Now, the standout brokerage reports. Nimish goes through a long list of what is being published each morning, and he comes up with what he thinks should stand out. Nimish, good morning.
Morning, Prashant. Today's standout is on ABB. A second upgrade this week. Today, BofA has upgraded the stock to buy from neutral, and they've retained a target price of 30 to 31. Remember, Kotak yesterday also upgraded the ABB to add with a target price of 3,000 rupees. Now, BofA has upgraded ABB for 3 specific reasons. One, they believe robust domestic outlook. So they expect 20% order inflow CAGR over the next 2 years between CY22 and CY24. They expect further margin improvement. So already there has been a 190 basis point improvement in the last 7 quarters, and they expect further 30 basis points improvement between CY22 and CY24. And third, a long runway of upcycle. So these are the 3 reasons they've upgraded the stock. Remember, the stock is corrected recently. So after the recent correction, the valuations have now come down to 52 times versus a peak of 73 times. So even valuation is a bit of a comfort. In fact, management has gone on record, and they're expecting large order inflows from traditional businesses, which is cement, steel, and high value orders from railways. So on back of good order inflow visibility and valuations have corrected now, BofA has upgraded the stock to buy from neutral, and they've written a target price of 30 to 31 on ABB.
Okay, all right, that's about ABB. Thanks for that, Nimesh. But we're also focusing on CEAT because some reports indicate that they have some ambitious plans going ahead. Sonia, fill us in with more on that.
Well, thanks a lot for that. So CEAT has a $2 billion target in terms of revenues in the near term, and they're looking to achieve that by increasing their focus in the passenger car segment as well as in the off-highway tires. Remember, currently CEAT is the market leader in the two-wheeler tire segment, but now they're looking to grow the SUV tire segment as well as the farm equipment segment. Now, I just want to put into perspective that this $2 billion target is not, it is ambitious, but it's not unachievable, because currently the run rate is, as of FY22, they're sitting on about 9,300 odd crores. If they grow at about 22%, that would mean about 11,500 crores in FY24 and then 15,000 crores in FY25. On a valuation parameter as well, very quickly, CEAT is cheaper than both Apollo Tyres and MRF on an FY25 basis. Hence, there is valuation upside for CEAT as well. Back to you.
All right. Thanks very much, Sonia, for that. And like everything, I mean, tire prices have gone up as well. I got a fresh pair for my car. And I can tell you that,
it hurts.
Compared to 4 or 5 years ago, I mean, prices are up substantially. So, yeah, I mean, good for companies, good for stockholders, but it does pinch for the consumer.
Yeah, even I have a new set, Prashant, but I didn't change it 5 years ago, so I don't know on my own cost.
You don't drive that much.
Okay, well, it's always good to use public transport. I come by the monorail. Okay, well, what do we have in terms of the preparation just before the market opens? It's looking like it'll be a green start. Bank Nifty also with its head up above water. And the first trades are with us very, very flat as far as the index is concerned. Oh God, we spoke too soon. There's a little bit of red as well on the screen. So let's take it through the stocks because there isn't much to highlight on the index, pretty much at yesterday's closing levels. A shade below 18,000, that pains a bit, but otherwise the market's actually flat. What's doing well? Coal India, of course, their sales have been doing well. The mine more output, and that's about a 0.7% gain. Metals are doing well. Hindalco, Tata Steel, all of them, and that was on expected lines. Metal prices higher, as well as, for all you know, the dollar may come to their aid. We've got, that's the top three, Hindalco, Coal India and Tata Steel. Reliance up at about 0.5%. ITC, SBI Life, UPL, Adani Enterprises, Eicher Motors, ONGC. Those are the stocks that are in the green. ONGC in particular on expected lines. Well, let's see how if the Bajaj twins are doing any better. Actually, Bajaj Finserv is still in the red, about 0.5% lower. And Bajaj Finance will come up for you. That one is actually a little bit wobbly. Bajaj Finance flat at this point in time. Among other stocks in the red, all the IT stocks, TCS, Infosys in particular, in the red. We also have ICICI Bank. I mean, it's facing weakness for the past few days, and that's continuing today. Another 0.5% knocked off. Then BPCL, oil marketing companies also not doing too well. Actually, the Bajaj Group, Bajaj Auto as well, a little bit in the red. So that's, nothing is more than 1% in the red or more than 1% in the green. So largely flat. Well,
that's right, Lata. IDBI Bank, that one, is higher in trade. They've written to the exchanges to classify the government holding as public after divestment. So some progress and some hope that the divestment is going to take place. Stock is up close to around 3%. RBNL, they bagged an order worth around 160 crores from Surat Metro Rail Project. So that's opened up with a gain of around 2.5%. We had some quarterly updates that came in from real estate names. Shobha as well as Lodha, that's Macrotech developers. Both of them, well, it looked pretty good. Both of them had opened up in the green. Let's see whether or not they're sustaining those gains. So Macrotech was up close to around 0.5% to around 1%. And Shobha was up 1.5%, so that's holding on to those gains as well. Force Motors, they came up with their update and they say that the total production's up by close to 12% on a month-on-month basis. Domestic sales are up by close to 15%, so that one's up by close to around 1% or thereabouts. Mukund, they've completed the transfer of land. Remember, this was already announced earlier. They sold the Thane land. Out of the total 800 crores, they've already received around 160 crores odd. Now they've received the remaining 640 crores. Why is that important? Because the interest cost will come down. Remember, there's a new promoter already taken over. They have close to 74% stake in the company. That's the Bajaj family has taken over. All in all, well, for the index, it's as flat as can be. My sense is that you get a bit of a dip in today's trading session, and maybe risk-reward could favor you closer to around that 17,900 odd mark, like we saw yesterday. Prashant.
All right, so I mean, absolutely flat, right? I mean, 10 points, 17,985 is where we are at. So things will pick up, I mean, hopefully, but 3 minutes in, not very much. Bandhan Bank is starting with about a 2 1/3% gain. It's been a huge laggard. hopes emerge every few months and they get promptly dashed. Let's see. But 2% higher with volumes. ABB is something which Nimesh highlighted. It's got a 1.33% pop. It did well yesterday in a down market. So ABB is another one you might want to keep on your radar. There is FACT, which is, a very small fertilizer company, 380. The stock's done phenomenally well. It's, I guess, continuing with 2.5% higher. There is RVNL. And these are sectors, names from sectors. There's never one. It's usually, when they move as a pack. So keep an eye. Dalmia Bharat is starting with a 1.34% gain. And what else? Mukund, I think we mentioned IDBI. So I won't repeat that. And on the downside, you've got Bajaj Finserv. Bajaj Finserv is now down 1.7%. And Bajaj Finance is, after that, it started higher. It's down about 0.75%. Now, these are important names for the market because, they are so widely owned across portfolios, across mutual funds, PMSs, across portfolios. Portfolios would hurt if these stocks remain lower. So keep an eye. RBL Bank is down 1.25%. Adani Transmission, Adani Wilmar, they're starting about 1.25% lower as well. So that's the Adani pack for you. So it's a, we started with a 3:1 advance decline, but that was, of course, at 9:15, 9:16. It's now even. Actually, declines outnumber advances now. So that's happened pretty early on in the session. Our market master of the day is Krishna Kumar Karwa. He's Managing Director at MK Global. He's joining us to take some questions. Mr. Karwa, great to have you with us here. Good morning. Thanks very much. First thoughts, Mr. Karwa, as we are starting in the sort of initial first week of 2023. How are things looking to you? Are they looking a little sort of iffy? We've seen markets being flat here on the Nifty, at least for the last 2 months, whereas some of the big underperformers globally have done well. What's your sense from here?
Yeah, I think fundamentally we need to understand and probably introspect that is there a structural valuation reset which is happening in the ecosystem. And this is primarily driven by the inflation and the interest rates which are hardening overseas and which continue to expected that they will further harden. And plus what is happening in terms of quantitative tightening which is continuing and which will continue for some time. So I think there is the 2010 to 2021 phase where we had continuously interest rates going down and because of that valuations moved up. So I think that is a fundamental question that investors need to grapple with, is that are we getting into a phase where valuation multiples for most companies have to be reset accordingly. I think that is something which is most important to worry about. As far as, yes, there has been volatility in the markets in the last few weeks and last 1 week also, and that is primarily driven by the FPI selling, and which is again a function of our markets being possibly overvalued versus other emerging markets, and maybe it is expected that other emerging markets like China, etc., could attract more flows than what our markets will attract. So I think that is the phase that we are going in, and in fact the bellwether NBFC yesterday corrected by some 7-8%. Now was a marginal miss in expected AUM growth, etc., and you saw a big correction. Now this is something which is a cause for concern, which means that stocks which are priced to perfection or which are relatively overvalued for the high growth that they were showing, and now when growth is possibly, so maybe others are also able to show similar kind of growth, then investors are willing to bail out of such stocks. If the stock doesn't correct and come back again, then again it will play into my understanding that we are getting into a structural change in the ecosystem where highly valued stocks will get corrected significantly.
Mr. Karwa, good morning. Thank you very much. Now, the balance of your arguments seem to suggest that you would bet on the market falling a bit more, at least in the first half of the current year. Is that
Lata, your voice is cracking. If you could please repeat your question. Okay. I didn't get the gist of
sorry.
it.
Okay, I hope this is better. Are you expecting markets to fall in the first half of this year? Not helping. I think Nigel.
Sorry,
I don't know whether it's
Mr. Karwa, Yeah, all right. Mr. Karwa, I hope I'm audible. Nigel on this end.
Yeah.
All right. Mr. Karwa, you know, just to push through what Lata was asking about.
Okay, it's not working. We'll do one thing. We'll redial.
Yeah, we'll just try to.
Not working.
We'll just try to fix that. By the way, the markets have moved into the red as we speak. We're down close to around 15 points. There's another Wadia Group company, National Peroxide. We don't talk about the stock very, very often, but there's a large trade that's taken place out there. Close to around 10 lakh shares have traded. It's a 1,500 rupee stock. So, you know, that one, in fact, is up close to around 3% as we speak. So, just one of the notable movers out there. It's up close to 4% as we speak. Not very high volumes normally, but today, in fact, we're seeing a bit of an uptake out there. Besides that, well, the markets are more or less quietish. The Nifty Bank, for the second day running, it's down. But is it providing an entry opportunity? It's down 150 points. It's recovered a little bit from the day's low. And Bajaj Finserv is the one that's one of the big losers on the index. Second day running. Some of these names that actually have done very, very well, the Bajaj twins, they have come in for a bit of selling as we speak.
I think we have to keep our eyes locked on the HDFC twins. On a day when the Nifty Bank is not doing too well and, you know, you're seeing finance stocks under a bit of a challenge for the past few days, HDFC Bank has actually been putting its hand up. They reported excellent deposit growth. You know, everybody's reported good loan growth, but HDFC Bank's deposit growth was standout, 20% deposit growth. Everybody else came in single digits. So perhaps somebody is taking note that they will have cheaper sources of finance, unlike NBFCs like Bajaj Finance, and maybe that comparison is working in favor.
That is the problem for. I mean, it's great news for HDFC Bank, but for companies like Bajaj Finance is used to grow at 40%. I mean, from FY11 or so, all the way till about right before COVID, right? I mean, it grew at 40, 45, 50%, and now you're basically growth rates are converging, both loan growth and profit growth.
You know, there are a couple of things.
I was looking at FY23 and FY24 estimates. HDFC Bank versus Bajaj Finance, and actually it is very close. I mean, there's a difference of about 200-300 basis points, where Bajaj Finance is higher by that much. But valuations, I was looking at FY24 price to book multiples for Bajaj Finance, still at 6.6 times.
Exactly.
Right? Which is, and its average for the last 15 years is about 4.5 times. And of course, you know, HDFC Bank is nowhere close. That's a you know, it's a real trade-off.
Yeah, and actually, you know, everybody is in the retail game. Nobody is lending to, you know, infrastructure or corporate. So that way, Bajaj Finance
competition is much higher now.
Much higher for companies like Bajaj Finance. Anyway, we'll discuss that again with even Mr. Karwa as soon as we are getting that line in order. But we have some updates coming on Macrotech, Lodha Builders. Sonal has more on that. Sonal, tell us.
Well, yes, the Q3 operational update of these real estate companies have started trickling in. And for Lodha, it looks like a good set this time around. In terms of bookings, the number has come in at 3,035 crore rupees, which is an increase on a YOY basis. There's a slight decline on a quarter-on-quarter basis. Collections, though, have increased both on a YOY and on a quarter-on-quarter basis, coming in at 2,700 crore rupees. Their net debt also has reduced. It is coming in at 8,042 crore rupees. The company has a target to reduce debt to levels of 6,000 crore rupees. That is by FY23. For 9 months also, the company has done well. Pre-sales are up 62% and collections are up 33.5%. And the 9-month bookings also include 600 crore rupees in terms of projects where the company is the development manager. And for 9 months, the company has been able to surpass the FY22 bookings as well at 9,039 crore rupees. Collections almost there at 7,673 crore rupees. The company now says that they are on track to surpass the pre-sales guidance of 11,500 crore rupees that they had given earlier. They also added 5 new projects which with a gross development value of around 8,500 crore rupees. 4 new projects with an area of 5 million square feet. They've already done gross development of around 17,800 crore rupees so far in this financial year, which is higher than their target of 15,000 crore rupees. So yes, this is definitely a good operational update coming in from Lodha.
Okay, that you know, that 11,500 always looked like a target they would beat. Thank you very much, Sonal. And we have fixed the line with Mr. Krishna Kumar Karwa. Mr. Karwa, what I was asking you is, you know, the way you're preparing us in terms of being cautious about high valuations, are you expecting a market fall, at least in the first half of this year? Are we any better off? Yeah, you are, Mr. Karwa. You're not able to hear us?
Can you repeat the question, please?
Yeah, why don't you? Prashant, yeah, you have been lucky.
Can you hear me, sir? Mr. Karwa?
Yeah, I can. Yeah, I can. Thank you.
Okay. It seems like I'm the only one.
Yeah, good. Go ahead.
Getting through. So, Mr. Karwal, Lata was asking whether are you expecting a fall in the first half for the market here, and what kind of a fall, if so?
See, I think it's very difficult to answer that question in a yes and no. I think there are two parts to it. As far as the flows are concerned, if you look at it, so far the domestic flows have been very, very robust. And I believe that the SIP flows, which are say 12 to 14,000 crores a month, that will continue to be robust with not too many changes over there. So at least the domestic flow seems to be robust. Now the question is all about the FPI flows. And it's very difficult to fathom how FPI flows will behave. So you will have these bouts of FPI selling, what we are witnessing now, and primarily that will impact your large cap stocks where their flows are very, normally FPI selling is much more in those segments. So that's one way to look at it. The other way to look at it is that of fundamentals. Now, markets are like kind of priced to perfection. Earnings estimates for beginning of 2022 and now beginning of 24. I think there have not been much, 23. There has not been any substantial cuts in earnings estimates. So we have not yet factored in any cuts in earnings estimates for 24. Now, if that happens, which could be a function of how our economy works in the light of the global volatility, so that could drive, if there are some earning cuts, then yes, there could be some sharp corrections. So it's a difficult question to answer, but volatility is given, and that's the reason I believe that if the environment is going to be so volatile, then you cannot give a high multiple or you cannot hold expensive stocks in your portfolio. And there can be a significant reset downwards as far as multiples that you give to the various stocks that you own.
Okay, let me try my luck again, Mr. Karwad. Do you think we should bet on the capex cycle? We have seen some upgrades coming for stocks like ABB. So would you bet on capital goods now?
I'm sorry, Lata. I think...
No, sorry. I'm sorry.
I'm struggling to hear your question.
All right, Mr. Karwad, we'll leave it there. Apologies for the poor line. We'll have you back with a proper fixed line. Thank you very much for joining us. Appreciate it. Well, Mark Mobius is now joining us. Needs no introduction. He's founder at Mobius Capital Partners. Mark, great to have you with us here. Thank you very much for your time. And from all of us here at CNBC TV 18, wishing you a very happy 2023. All the best of luck. In case we forget to wish you that towards the end of the interview. Mark, this year and the last 2 months actually, right, starting the 1st of November till date, the Nifty, the Nifty index in India is absolutely flat. The Hang Seng market is up 47%, and you got markets in Europe which were big underperformers, which have come back very strongly. Is that the big theme, at least in the beginning this year? The comeback of the big underperforming parts of the global stock market, whereas the big winners perhaps stay a little subdued? What's your sense?
Well, I think the big winner, of course, is India. And the fact that India has outperformed everybody else is an indication of the incredible growth that you're witnessing in India now, which will continue in this new year. I believe that we're in a very, very sweet spot when it comes to India. A lot of things are going well for the country compared to other parts of the world. And despite the fact that you have recession fears in the US, the reality is that oil prices are coming down, and this is very good for India. And also, the Indian economy is doing very well on the back of the reforms that Mr. Modi is putting in place. So I think we're very, very good position in India compared to other parts of the world. Nevertheless, in any kind of problem, you're going to have winners and losers, and regardless of what market you're in. So there are going to be tremendous opportunities this year, and I'm looking forward to continuing to invest, not only in India, but in Taiwan, in Korea, and across the world.
Okay, all right. Hi, good morning, Mr. Mobius, and good to speak to you in the new year. Well, in the past, Taiwan has been your top allocation, followed by India, and then I think China. How has that changed? I think the last time you briefly mentioned that maybe you'll be skimming off some allocation into Taiwan, and maybe it goes to India. How has the change, say, in the last few months?
That's right. We're gradually decreasing the amount in Taiwan and increasing the amount in India. But of course, these changes take time because we're not big traders. We're not in and out of the market on a daily basis. So what we do is we gradually increase positions we have and maybe add some positions in India, while in Taiwan we may subtract and reduce the amounts that we have in some of the companies in Taiwan. But these things will take time, and it's an ongoing situation. Of course, depends on the markets. If you could be reducing in one country, but if the prices are going up, it doesn't look like you're reducing, you're actually increasing.
Mark, a constant refrain or complaint from investors is that India is expensive. Does that deter you?
Well, I think what you see in the general market condition is that there are lots of fears about COVID again in India, coming from China. And then you have the fears of the lap over of recession from the US. But I think these are very minor problems facing India. And the real situation in India is the reform process, which is taking place.
No, got that. Mark, there have been some kind of sort of outrageous calls made by large money managers saying that this is going to be a sort of tough year. I'm saying outrageous, I should say big calls, right? Big price declines for the S&P, for the NASDAQ. The general sentiment seems to be it'll get a lot worse before it starts to turn a corner and get better. Should we continue to expect a similar kind of resilience and outperformance in India, like what we saw in 2022, if we were to see another, say, 20-25% fall in the US? Or you think it'll be different this year? Your sense?
My sense is that more money will go into India on the face of the incredible growth that the country is facing and experiencing, despite what's happening in the US. But don't forget, the US has already come down quite a lot. So you may see another, let's say, 10-15% decline in the US, but not more than that. Then you're going to see recovery coming forward. Don't forget, the markets look forward. So the markets are now not looking at 23, but 24, 25. So going forward, you're going to get a much stronger US market, even in the face of a recession, because the market is looking forward. And you remember, there's still an awful lot of liquidity left in the system. Despite the fact that the Fed is trying to pull back liquidity, the reality is that there's lots of money available to consumers and investors in America.
Okay. Mark, what would you bet on in India? In 2022, the finance stocks, banks were the best performers. What's your favorite?
We are not too interested in the financial sector and the banks globally. We find that generally speaking, the banks tend to be somewhat opaque, let's put it that way. So we prefer stocks in the technologies area, like persistent systems in India, software companies. We prefer healthcare, companies like Metropolis, and we prefer companies that are doing something in the infrastructure area, particularly in India, because the infrastructure spending is increasing. So you have companies like Apollo, Tubes, and so forth. So those are the areas that we really are interested in investing. In the short term, you may see good performance in certain sectors like financial, but I think in the long term, the sectors that we've selected, we believe will do well and continue to grow.
Anything new, Mr. Mobis, that you'll have added? In these stocks you have been invested in, whether it was Persistent, APL, Apollo Tubes, Metropolis. I think you'll have had this in your portfolio. Anything fresh from the India basket that you'll have got into? Case in point, saying that you like infra companies. Have you added any of them? If you could name a couple.
We haven't added anything, but we're still exploring where we can add in India. There are a number of software companies we're looking at. We're looking at healthcare again. and also some of the more interesting specialized tech companies, companies, for example, that are doing mapping, companies that are doing consumer surveys, that sort of thing. We are still looking at, but we haven't made any decision yet.
You're a strong proponent of ESG. You brought out a book, arguing your case. And India is trying to go big on green hydrogen. We had a policy announced a couple of days back on green hydrogen. Do you play that theme, pick any stocks on the basis of that policy?
Hydrogen, of course, is big and is going to get bigger. It's something that a lot of people are looking at, and we believe that will be a big source of energy going forward. However, we're still looking at the experimental aspect. It hasn't paid off yet. And so it would be premature, I believe, to be investing in companies in that area. We have to wait to see how the technology develops. So this is something that we definitely are looking at, but I think it's too early to invest in that arena yet.
All right, that's one place which has got a fair bit of policy push, right? I mean, point taken, Mark. You mentioned Metropolis. Because you own it, and the prices come off sharply, right? From the, it's basically come off some 50% or so. The diagnostic space. I just wanted to understand what's your view first on why there's been such a steep fall, and how do you see things panning out? There's Dr. Lal, which is a competitor. There are others listed as well. Go on.
I think what's happened is that because of COVID, a lot of people thought that, these companies like Metropolis who are doing testing will do very, very well in a COVID environment. But then when the COVID is off the paper, then these companies will not do very well. So that's the reason why you've seen the decline. In other words, a lot of people said, okay, COVID testing is over, it's declined, therefore let's get out. But if you look at the earnings of these companies, you'll find that COVID testing is not a very big part of the total. So I think the market has missed that little secret. So we think that these companies will do well going forward. There'll be fluctuation, of course, in the price of the stock. But going forward, we think that earnings will continue to do well, and you're going to see a recovery in the price.
Okay, all right. Mark, what about the Indian markets? With a 3 to around a 5-year perspective, do you believe we continue to compound? That's returns of around 15%. I think we briefly touched upon that in the past as well. So do you stick to that? And also, what about portfolio construct? You have been, allocating some kind of money to gold. That's always been, the way you approach asset allocation. Your sense for 2023, given that we could have a bit of a rough ride?
Yes, well, if you consider the GDP growth, real growth of India is 7%, right? Usually you can use that as the benchmark for predicting the growth of the market, which will be double the GDP. In other words, 7 times 2, 14, 15% returns in the market is normally what you would expect. And so I would stick by that prediction. I would think that the market is going to continue to return that kind of increase. Of course, there'll be fluctuations. You're going to get ups and downs, but on the average, I think that's the kind of increase. In terms of capital allocation, we are not very interested in doing a macro allocation. In other words, we don't say, we think oil is going to do well, therefore let's go into oil companies. What we do is say, okay, we like the economy. Generally speaking, certain sectors are doing well, but then we zero down on the companies. In other words, companies with a high return on capital, companies with low debt, particularly in this environment, are the companies that we want to focus on. And then we build the portfolio based on these specific parameters. Of course, the result is that you get a pretty diversified portfolio, but a portfolio that's very different from the index. And it also leads you to some of the smaller companies rather than some of the big cap companies that represent the index. So that's the approach.
Yeah, now got that, Mark. It's a pleasure. Great having you with us here on CNBC TV 18, and wish you all the best for 2023 and beyond. Thank you very much for taking out the time.
Thank you.
Thanks very much. Okay, Mark Mobius, bullish in India, and it's the #2 market in his weightage in his portfolio. perhaps soon to be number one, as he pointed out. Well, just a few names. By the way, the market went up almost 50-60 points. It's up 30 now, so it swung. That's one. That's the Nifty, 18,023. Market breadth has also come back into the positive. So 1,200 stocks are higher, 800 stocks are lower. And then look at these stocks. I mean, Paytm is up about 3.5%. It's at about 560 or so. I mentioned Bandhan earlier. But Astra Microwave, it's a small defense name, small cap name, but 7.25% higher on Astra Microwave. So that is doing very well. You got Anant Raj, which is up 3%. Mukund is up 6% now. Sobha is a new addition into the mix, 2% higher, 578. And I'm only mentioning names with volumes. Godrej Industries is up 4%, and so on and so forth in terms of stuff which is doing well. On the downside, Fact is now completely lower. It was up 3%, it's down 3%, and it's the top volume traded name, by the way. That's Fertilizer Travancore. Apollo Tires is down 1.5%. GIC RE, which kind of almost saw a re-rating, 50% re-rating very quickly, that's down about 2.6. UCO Bank is something which is down about 2%. And lots of these names, well-tracked, well-traded names, Max Healthcare, Cochin Shipyard, South Indian Bank, all in the 2% cut zone at this point in time. 35 points on the Nifty, so not running away in either direction. 18,027. We take a quick break here. Anush Poddar, Managing Director and CEO at Bajaj Electricals, joins in for an outlook on demand and business. Later, we also analyze expectations from the IT services space. Results start next week in our special segment, Quarter Se Quarter Tak. And we'll have Apurva Prasad of HDFC Securities joining in to help us with that. Stay with us.